everything has now been transitioned into a financial product, and it's set up for trading, right?
Yes.
Here's the challenge though, because again, it is misdirection. It goes back to this, everything goes back to perception management, right? So you see Bitcoin, or you see the stock markets, or you see anything go up in nominal terms, and you're like, yeah, I want that. I want that. When in reality, the purchasing power value of what you can convert it into is going down, right?
Yeah, exactly.
So it hides the truth. And it doesn't matter whether it's Bitcoin or it's stocks or
any of it.
Any of it. Any of
I
it.
agree.
I mean, there's no doubt, since we're inside of a system, and this isn't just the US, this is globally, that money is created from creating more debt. The intention to ever pay that debt off is not there.
Never has
Because
been.
then you're destroying money, right?
Absolutely.
And so, right. So once you get to a point where you have saturated, and we know that that's true because of the lack of volatility in the US Treasury market. And this has been an ongoing problem, particularly since 2015. So this isn't new. This is just getting bigger and bigger. But with gold, how do you know how much it's worth? Because I say so, who am I, right? This is how you know. If money is created from debt, how much debt is there in the world?
There we go.
Right?
Yeah.
We know we can account
Quadrillions.
for yes, definitely
Beyond.
quadrillions. So we know that there is a finite amount of gold, and we can account for 98% of it that's ever been pulled out of the ground. And every year, the Department of the Interior runs a study on in-ground gold. So we know how much gold there is to burn off this debt, to enter that new system clean. So again, I go back and I say, well, how do you know how much gold is worth? Let's just do a really simple equation. I'm not going to get you to the penny, but I'm going to get you pretty close. Because when we go into a hyper circumstance, whether it's inflation or deflation, when they need to get confidence back in the system, they put a component of gold in them. When they do those, they say, okay, like there's the gold. But when they do that overnight reset, they take this garbage that is used in one place, has no intrinsic value, and they revalue it against gold, which is all intrinsic value. It's all intrinsic value because it is used in every single sector of the global economy. So it has the broadest base of buyer, it has the broadest base of utility. That's when you'll see gold start to express to its true value. So if you want to know the fundamental value of an ounce of gold, just take all the debt that's been created and divide it by all the gold that exists. I mean, this is not rocket science, right?
It's,
Probably like 30, 40 grand for an ounce.
Yeah, or more. I think it's a lot of hopium that somebody magical out there will just come down and go plunk, and everybody's debts will just go away without any consequence. It's a nice thought, but do I think that that's realistic? Probably not. But what do? You prepare for the worst, and then anything that's not that, you're in a good position.
You're in a good position.
So become your own central banker so that you can pay off any debts yourself. I would not be counting on somebody outside of you for your save yourself and save your family. And the way that I personally have done this is by making sure that I have enough gold so that when we do that overnight reset, boom, I sell a little bit of gold, pay off that mortgage. Do their own due diligence. Don't take anybody's word for it. Don't take those in power's word for it. They have an ulterior motive, and they are shaping and changing the discussion to move you, to nudge you in that direction. Just this, if you said to me, if anybody said to me, okay, Lynette, you can only ever work with one graph, one, it would be the purchasing power graph would be the one that I would choose because it really tells the whole story right there, right?
Yep.
Here's your dollar's worth of purchasing power. Now officially you're at 3 cents. And as long as there is inflation, that's going down to 0. So wherever you were born between 1913, like I was born in 1954. In 1954, let's see, there was roughly about 40 cents worth of purchasing power out of the original dollar. Now there's 3 cents. So
Crazy.
to your point, they have lied to you since the day you were born. And here's the other piece when you're talking about money and savings. The moment you get this garbage in your hand is the moment it has the most value. Every second after that, it has less and less purchasing power value, period. If you don't believe any of this, just go to the FRED, F-R-E-D, that is the Federal Reserve Education Department, and in the search bar, put purchasing power of the consumer dollar, and this is what's going to come up. And you're going to see it for yourself. That's them telling you, which means you know it's worse. You know, I felt that there was going to be a crisis the beginning part of the year, and we did. We had the regional banking crisis.
Yes.
I think there's going to be something bigger before the end of this year. Even though the world is not likely to explode on the 30th of June with this transition, that just adds so much more pressure to what the banks and the corporations and the central banks are already sitting on top of. I think there will be a black swan event that nobody can really see because that's the whole point of a black
That's the
swan.
point.
Yes. Unforeseen event.
Exactly. And so you need to be ready. And another reason why I say that is look at how far they've pushed gold. I mean, like what, 1926
Yeah.
or something like that, inside of crisis after crisis after crisis. Sure, makes sense to me. If the Federal Reserve raises interest rates, certainly gold should go down. Gold doesn't
Oh,
have to
God.
pay interest because it's the safest thing that you can do. I would say that the biggest challenge for most people is procrastination because they're not really sure what's going to happen. But I want you to just think about the fact that if you buy physical gold and you're holding it, that's the worst thing that happens. You actually have something that central banks are accumulating because it is indeed the safest thing that you can do.